Welcome to the Same Day Podcast, where we discuss driving incremental business growth and other topics related to real estate, property management, and entrepreneurship. Now to the show at hand.
Matt Zalk here. I'm the host of the Same Day Podcast, where I connect with top business experts and real estate leaders. Some of our past guests include Lee Easton of AeroVision, Kurt Volk and Sean Prince, awesome clients of ours. Mike Bosch of Atento Capital. We've had some great conversations. Chip Gabarino was on here recently too, and it was very fun to chat with him. Today's episode is brought to you by Keyrenter Property Management. At Keyrenter Property Management, we are a full-service property management company helping our clients buy, renovate, and operate real estate assets. The buy part is where Mark here comes in. I'm going to introduce him in just one second. We help our clients build wealth while taking the headache out of property management. Listen, Mark, you and I have a bunch of clients in common. You've helped a bunch of them secure golden tickets, as we call them in the industry. That's 30-year fixed mortgage. I don't even know if you know that, but that's what we real estate investors call them. We call them golden tickets because they're beautiful 30-year fixed mortgages. About 65% of the properties that Keyrenter manages are financeable on golden tickets, meaning single family houses or duplexes. I think you guys will even go up to fourplexes. Let's talk about that in a second. And the remainder of our units are, I guess, required to be put on commercial notes, but that's a little bit beside the point. No matter what rental you have, a single family home, a condo, townhome, apartment, whatever it is, or however it's financed, we have the management solutions that you need. Go to keyrenterpmc.com or email us at info@keyrenterpmc.com. A huge shout out to our BNI chapter. Mark, you and I are in the same BNI chapter, Green Country Business Alliance here in Tulsa. That's where you and I first met. We've got a ton of great entrepreneurs and business leaders from our community in the chapter. And the general philosophy of BNI, which is, of course, givers gain, has been a huge help and a huge part of my life since I learned about it 4 years ago when I joined the chapter. And you were already in, actually. So you were in long before I was. Before introducing you, Mark, and I do want to do that, I'm going to get to that eventually, I promise. I want to give a shout out to Chris Lyle, because he's the one that actually, I think you brought him to the chapter, and then he encouraged me to get with you and spend more time. And that was, obviously instrumental, helpful, so that we could get more of our clients in front of you and get a good lending experience to all those people. Chris Lyle over at State Farm. He's also been in BNI about the same time as I have, and he's been a great business partner to us. So go check out Chris Lyle's website at www.diallyle.com. That's DIALLILE, diallyle.com. They specialize in homeowners insurance, rental property insurance, car insurance, and all the other stuff that State Farm does. And they're just awesome, super responsive, and have a great team under them. Finally, Marc Marroquin, our guest today, has a book of business and a pipeline over at Supreme Lending. He's been there for the last 9 years. He's a 20-year veteran residential mortgage lender. I guess technically it's a licensed mortgage loan originator. That's kind of the technicality of it. Mark helps folks invest in real estate for personal and investment use. He's a member of multiple communities in Tulsa, a couple that are worth mentioning. He's a member, Church on the Move. And through Church on the Move and some other men's clubs over there, he's hiked a bunch of 14ers in Colorado over the past couple of years. That's fun and exciting. Maybe we can get into that a little bit today. Welcome, Mark.
Hey, Matt. Thanks so much for having me, man. This is a great honor.
Thank you for being here. These last couple of years in mortgage lending have been crazy. I mean, the real estate market's been nuts. People are making offers on 20 houses before they finally get something under contract. It's been equally crazy for mortgage lenders that have to keep up with the pace of property sales. What's differentiated you from other mortgage lenders during these craziest of times?
Man, you're right. It's been wild. With the rates low as have they been over the last couple of years, of course, it's helped generate a ton of interest in people purchasing and refinancing. But on the purchase side, like you talked about, it has just kind of been the wild west out there for buyers and buyers agents, buyers realtors on trying to get a buyer's offer accepted that isn't a cash offer. And even those cash offers are hard. So I think what's been really great for myself, my team, and our whole office here at Supreme Lending has just been able to, stay really close with our client and their realtor. And we have a really great reputation in our city and surrounding cities. So I think, when a listing agent sees, number one, our pre-approval letter, it's like gold to them. They're going to know, like, hey, man, that's a trusted company, that's a trusted loan officer and a trusted branch that he works out of. And so with that said, I feel that me and my team in our office here, we're power communicators. And what I mean by that is my buyer's not left in the dark. Their agent's not left in the dark. And we could pick up the phone and call the listing side too and loop them in of like, hey, this buyer is solid. We've checked income, assets. It's pre-underwritten. You accept this offer. We're going to close as fast as you want.
Beautiful. I love it. You've been doing this for 20 years. What do you see today that's different in the industry than when you started 20 years ago or even 10 years ago? I mean, what's different? Is there something in technology? Is there something in personalities? What do you find?
Yeah, all of it, man. It's a lot more faster paced, I feel. I think that it's a lot more faster paced with the technology and with social media, with personalities that have popped up. I've been in this business for the last 20 years, and now I've seen a new wave of young guns coming into our business, and they operate kind of different than probably some of us old farts operate. And you're kind of watching a new type of loan originator pop up, and it's really exciting to see. Honestly, that's not a jab at anybody, but it is kind of like, wow, that didn't used to exist, or each individual having their own platform and their own social media presence, and great communicators and super smart loan originators rising up. So I would say that we've just seen that, just like the faster pace of, it's a great business to be in. Someone can really come in and build a great career, help a lot of people, make some great contacts, and really build something for themselves. It's heavy populated. There's a lot of competition. And I just think that not too long ago, you could just be solid at what you do, and word could kind of get out, and you can meet some people, and you could really load up business. Now that's just not all that it takes. You could be awesome at what you do, but you could kind of also be obsolete if you're not out there networking and connecting and kind of doing the extra to be on top of things. Right.
What's the role of automation? I mean, at this point, do people need a mortgage lender? Can they do everything online? And who are the people that do it online, and who are the people that might still need a lender?
Well, that's a really good question. The myth is that it's all automated, but there's someone behind that automation.
Right.
So, I think there is beauty in the automated. Click this link. You never talk to anybody. Submit income and asset documentations all via email. You're not really chatting with anybody, and then voila, you're at a closing table. There probably is some of that, and that can happen. I will say that, I think that is for the very few, that probably there's no blemishes. There's no questions. I think at the end, there probably are some questions and a little bit of blow-ups on some of that stuff. But I'm just a believer in that, really, not just your average person, but above average, like you, they need a human contact. They will have questions. And even through an email exchange or through a text exchange. And, I love a face-to-face. Now with Zoom, you can have face-to-faces with people or meetings, and I can share a screen. I love a handshake. So I think, of course, number one, the buyer who needs help with understanding and the hand-holding, and maybe their file is a little tricky and they need some extra love and care on their file. I mean, for sure, they need someone, because a lot of people behind the automated stuff aren't experts in their field.
I mean, is some of that stuff just going out to the Philippines or to India or whatever to be processed? I don't know. Is that legal?
Yeah. I mean, I just don't even know. I couldn't answer that. I don't know. I don't know who's up in Michigan and sitting in a sea of cubicles and just processing stuff. But I know that it's garbage in and garbage out on anything that's automated. You know what I mean? Like, you can type in whatever, this is my income, this is my assets. And if that's not really the case, or someone's not really scrubbing tax returns for a self-employed, I mean, you work with a ton of entrepreneurs because you're an entrepreneur, self-employed person yourself. I mean, you need someone going over those tax returns.
I've never done a closing. I've never done anything without a mortgage lender. I would be super scared. And even mortgage lenders that I work with, that I've worked with in the past for the properties that we own in Colorado, for example, are always like, oh boy, this is going to be complicated. You're going to need, let's make sure that we've got enough days to close this thing, because my wife has a W-2 and she's, has a pretty plain vanilla situation. But from our side, from a business ownership side and K1s from all sorts of different businesses and all sorts of different real estate entities, it gets super complicated. And more often than not, mortgage lenders go, you just get off.
Yeah, they're
just do this with your life.
That's right. Man, complicated. I mean, and listen, I want ease of operation. That doesn't necessarily mean easy deals, but ease of operation. So yeah, at any time that we could say, hey, this is the easier way to go. But if you're talking with someone like going through the automated system that we're talking about, where, hey, you don't need that true professional. That's not professional. That's not a true professional or an expert. They're not prepared. They're not picking up the phone and calling your CPA, Matt.
Right.
And just saying, hey, we had a question about how you did Matt's partnership on this actual business. And hey, is this correct? Because my underwriter's asking such and such. I mean, no one's picking up the phone and making those calls.
So you guys take all that headache away, basically. Instead of going, hey, I've got questions, I'm putting the burden back on you, to the client. You pick up the phone and talk to the person directly and just answer the questions. And that way it just alleviates a huge burden from the client side. Is that right?
Absolutely, man. We're in it together. That doesn't mean let's split roles. Here's your homework, my homework. We're in it together as like, hey, I'm invested in this. And this is a big transaction. This is a big purchase. This can be the biggest headache of your life, or could be the easiest operation or this easiest process of your life. And that's where we come in. And that is to kind of go back to what you originally talked about. Like, what are you seeing different? And what are you seeing that's separating you? Different is it's super fast paced that I've never seen before. And it's real. There's some real slicksters out there. You know what I mean? Like there's a lot of slickness to this business, but what keeps us separated, and I think what keeps me at the top of my game, is the expertise.
Right.
Because you can't fake that stuff. You know what I mean? You can't put a filter on the expertise. You either are, you aren't.
Let's talk for a second about different types of conventional loans. Or FHA, are those all considered conventional, or is it conventional purely a Fannie Freddie 30-year fixed?
Yeah, that's kind of like, for rule of thumb, the conventional is your Fannie and Freddie. And with that is a 30-year fixed, a 20-year, 25, 15-year, 10-year. There are some arms in there that is still could be conventional. And then government side, you have your FHA. And then with FHA, that's kind of the umbrella. You have 203K loans or the Native American loan. There's program, but FHA, VA, those.
Okay, so FHA and VA are actually separate loans, or they're all government loans?
They're both government. They're separate loan programs.
Got it. So when our clients, let's leave aside for a second the government loan programs, because most of our clients and real estate investors aren't going to be eligible for that. Maybe there's some VA stuff, and it might get a little bit shady if you're trying to do something that you shouldn't be doing. I have no idea about that. But let's talk for a second about conventional loans. When we have clients that are considering the differences or the advantages between a higher annual principal pay down, like on a 20-year fixed note, conventional, or the higher cash flow that's associated with a longer amortization schedule, like a 30-year fixed note, how do you advise them? How do you help them make the right decision for their particular situation?
Well, I just always want to find out what their goal is. What's your goal in this situation? So, if our audience today is a lot of your clients or soon to be clients, and hey, I'm looking to start purchasing properties and I want to tenants in them, they're going to be paying them. I'm not in a rush to necessarily pay this off. They're going to pay for it. I'm making some cash flow monthly off of it that I could add to the principal myself. And I also want to buy more properties. So I want to keep my debt to income ratio low. Then you bet. 30 years probably going to be like, hey, we can get you more buying power with a 30-year loan. Now there's no prepayment penalty. You can still be aggressive with the pay down, adding to the principal. We can run math for you and give you a separate amortization schedule if you'd like. But yeah, like those who are like, man, let me start getting some rental properties going, and I want them on a nice conservative 30-year fixed. We can do that. If someone's like, hey, I think I'm going to buy a rental property. I want to be in the rental game for about 5 years or something. I want to buy this thing. It's my kid's tuition. So in 5 years, I want it kind of paid off or whatever. And I want to, I'm not the guy that's going to be putting big lumps of sum on it every tax season. then man, let's shave that down and be aggressive with the 15-year term.
Yeah, right. Does it matter what type of conventional loan you take, and can you do 20% down or 10% down, or is it always kind of 20, 25 across the board? And what determines that?
What determines that is the type of property. So if we're talking about a primary residence on a conventional loan, minimum down is 3%. If we're talking one of your investors wanting to buy an investment property, minimum down is 15%, and things just get better. I mean, if you could put down 25%, that's a sweet spot for us. And
so you get a better interest rate, or
you're going to get a better interest rate. Yeah, I say that for rate wise.
Yeah.
So if you're putting down less than 20, you're talking mortgage insurance premiums, which won't be much because you're putting down 15%. But the way a lot of lenders, what we call price their loans or their rates, just on investment properties, man, the more you can put down, the more favor you're going to have. With
the lower the risk to the lender, I guess.
Yeah, absolutely. More investment, the lower the risk. How
does it work from your side? You package everything up and you take it and shop it to a bunch of different like primary lenders. How does that work?
Well, that's the secondary marketing side, and I don't know that much about it. So I'm on the origination side. So the company that I work for, Supreme Lending, we're a mortgage lenders, and we close in our name. It's our money that we're using. We actually service loans too. So we're the full deal. Now, we do disclose that your loan could, another investor could pick up your loan in the secondary market, and now you're making a payment somewhere else. Yes, on the back end there's some, I think there's loans that get bundled up, and depends on who's buying what. That's appealing to our investors. Could get sold off. Yeah,
at some point you've got to recapitalize, and sometimes they get sold off so that you can originate more loans if you don't have enough, whatever it is, tier 1 capital or whatever it actually is. So do you have an understanding of how many 30-year fixed mortgages an individual can take out? If I'm a single guy, not married, how many golden tickets can I get?
I think you're probably allowed. Now, each lender may say, hey, with us,
right,
we're going to cap you at 6 with us.
Yeah.
Total with Fannie Mae or Freddie Mac loans, 10.
Got it.
Somewhere between 8 and 10.
And why would Freddie and Fannie have one number and the actual lender have a separate number? It's just risk and exposure.
I think risk, you know what I mean? Like, hey, do we really want to, be this deep? And I can't speak for all lenders. I just think that comes up from time to time. Like, hey, we're good with this borrower to do, 6 properties.
Yeah.
And sometimes that just works out in general, because you could have someone that comes in and they already have a few. So we're capped out at 4,
sure,
or 5. And then Matt, you have the most connections that I know of anybody. Someone starts getting a ton, and then they want their line of credit, and then they're going off and doing, kind of big banking, big investor banking.
Right.
And so now they're even off of that grid.
Right.
We're not worried about 10 anymore.
What happens though? So when a person buys their first investment property, it gets rented. It's now kicking off $200 a month in cash flow. How long do you need to show that? And what do you need to show? Does it need to be a lease? Does it need to be duration? Are there tenant ledgers? I mean, do you have to show deposits and bank accounts? What do you need for that income to now become part of their debt to income consideration?
I think it's a time frame situation. So if you send me one of your investors, we close on that investment property, and they still have a good amount of money to buy the next property.
Yeah.
Then we'll just turn right back around and buy the next property. And here's what we're showing underwriter. We're showing the underwriter the lease agreement.
Got it.
Because there are no tax returns filed yet.
Right.
Once we get to this house is seasoned and now they're filing taxes on this home, then we'll go off the tax returns.
But so from the point of lease, that can be used, and underwriters will recognize that as future income. So the faster it gets leased, the better. And we want to get a maximum rate super quickly. And then that helps them buy their next property if they want to do so.
Oh yeah. Absolutely.
What do clients, so the clients that are interested in buying properties, we get calls all the time that are for people that say, I want you on my team. I want to know the lenders that you use, et cetera. I'm thinking about buying my first property. I've got so-and-so cash saved up, et cetera. What do they need to do when they call you? What do they need to show you? What do they need to be considered for you to start working with them and for you to, what are the next steps after that?
First things first, it's the introduction and a conversation. If you've got one of your, because I know people chase you, so this is a wonderful conversation. They want to let's just talk and tell me what you're trying to do. Tell me what you're trying to accomplish. And then we can start, we'll get after it. So, but as far as the process is, let's have that conversation. Let's try to find out what you're trying to accomplish. Then we got to get the loan application. Yeah. We have to see where you're currently at. So 2-year income, 2-year living history, your last 2-year work history. Let's look at your income and assets and and your credit and what do you qualify for? So, and then we can go from there.
What's the lowest credit score that you can generally get somebody approved for a conventional loan? I know it depends on a bunch of different stuff, but where's the point where somebody says, look, I'm just not even going to apply? And maybe they talk to you anyways. I mean, I've put you in touch with a lot of people that are just looking to buy in the next couple of years. They need to build their credit. Where are they building from? Where do they need to build to?
Conventional, if someone, I think we kind of have two different conversations going right there. If someone's trying to buy their first house and they've kind of have some challenging credit right now. Yeah. And we're probably saying, hey, are you kind of in this 580 range that maybe we can get you up to a 620 range? And now we're looking possibly at a government loan, that FHA loan, very little down, very forgiving in underwriting. The automated engines are very friendly on their credit and income. Yeah. If this is like investment property, then money in the bank, money to put down, and 660, 680. I mean, you're going to get beat up pretty bad on by conventional going investment if you're not ready, because you're just not ready.
Yeah, and the logic is there. Primary residence, you're much more likely to keep that thing with everything you've got when times turn tough. Whereas an investment property, somebody is more likely to walk away. I mean, from an underwriter's perspective and the risk associated with it, the rate, they go, I wash my hands of this and walk away because the market's turned, and that's a riskier loan, I guess. Is that the right logic?
Absolutely. If we hit some terrible situation, you're protecting the roof that's over your head with your family. Yeah. And if by some reason, like that rental property didn't make it, sorry. Yeah. And so that's why the guidelines are the way they are. And that's not just because it's made up. There's a history out there. All these rules are from a history, a pattern.
Right. So, I mean, we're talking today on the 28th of June, 2022. Interest rates just took a 0.75 of a point bump. I don't know, a week or 10 days ago, whatever it was. So we're seeing kind of a holding pattern in our business. People aren't necessarily as aggressive as they were 15 days ago. They probably will get super aggressive in the future. They're willing to accept higher rates, our investors, generally speaking, but they want to know they're in a holding pattern. They want to know what's going on, generally speaking. But I will say, in the Tulsa market historically has just grown. Even in 2008, it kind of grew a couple points a year. Rental rates stabilized, flattened a little bit, and then kind of continued through. So I'm hoping that we don't have a significant downturn here in the Tulsa market. We've not historically seen that because we haven't had huge growth or huge appreciation into bubble territory over the past 3 or 4 or 5 decades, realistically. Whereas some markets in California and Florida and Nevada, they have seen such significant growth that the downturn has tended to shave some points off the top line, asset values and rents, et cetera. So hoping that doesn't happen. Tell me, in your transactions, I know you talked about communication before. What's the most value additive thing that you do for a prospective client that walks through the door as an investor?
As an investor, I do think that communications I'll always put at the top that we talked about, and then the trust. But our expertise and our team here will give the investor, like, I trust them over, again, like, we're not strangers. Right. We believe in the relationship. I want to build a business off of a relationship. And that doesn't mean like we don't have the bells and whistles, like, hey, apply online. Of course we have that. And it's in the middle of the night, or we got to talk via text, and then, hey man, submit your upload your documents through this portal. And we have it all. But for an investor, man, a lot of stuff can get scary of just knowing like, man, are you sure you looked through all my stuff? Like, I have a couple of different businesses, one I've had for 2 years, one I've had for 1 year. I have some rental property. I'm also this. It's complicated. So communication and then the expertise will build the trust. And that's we're in your corner. I really believe that. Like, we're in your corner. We're on your side. We want this transaction to go through, and we want to steer you in the right direction.
Yeah. So some just general peace of mind associated with somebody on the other side of the transaction that's in your corner, that's rooting for you, that's helping you, that's dealing with the experts that on questions, concerns, thoughts that could go over somebody's head when it's their first or second or third transaction. That's what it sounds
Nobody
like.
feels safe. Nobody feels safe right now, and it has been times. I think we're kind of like leveling off right now, but yeah, over the last few months, there's been a lot of tough phone calls of, oh man, yeah, at the beginning of the year, we pre-approved you at this interest rate. And it's just change. If you don't have that trust and that someone feeling safe with you, they're already nervous.
Yeah.
We have with the consumer that's why people are on hold.
Yeah.
Or some people are like, well, let's just see what pans out. Well, there's this nervousness. They're scared. So a lender dealing with your finances, man, we want to make you feel secure and safe. Right. Of like, we've got your back. This is all squared away. Everything looks promising. Go have fun shopping for a house.
Yeah, love that. I hope this generally helps our investor clients understand kind of why they need a mortgage lender in their corner to help them, dot all the I's and cross all the T's and just be an advocate for them during the transaction, because it can get hairy, it can get scary, and it's good to have somebody like you in their corner. Tell me, switching topics a little bit, what are you listening to these days? What books are you reading? What do you both for enjoyment and for professional development? What do you think our listeners would be interested to jump on?
Well, just like, gosh, I've done a lot of reading over the last. I'm kind of always reading something, but if to just like in this moment on the spot, it's kind of strange. It's not strange, but I just. I'm finishing. I'm going to give you two. Good. One, I'm reading a book called Wonder with my 9-year-old.
Love that.
So yeah, it's a great. It also turned into a movie, so we're looking forward to finishing up that book. It's really good. It's about a little boy, and he was born with some deformities, so he has. It's kind of a deformed face, I guess we would say. I don't know the right ways to put it. It's just kind of the pain he goes through and his family that's around him. So it's been really good to read that with my boy. It's very pulls on your heartstrings and gives you lots of stuff to talk about. And then me and some of my friends here at my office, we just finished this book called The Energy Bus.
By who? Don Gordon?
John Gordon. Yeah, cool. John Gordon's a top author. I mean, he speaks to a lot of professional teams, and he does some really good writing. A lot of shorts. They're kind of the books. A lot of his books are short, and they're built around storytelling, and then there's principles in those. They're built. Principles are built in there. So I think The Energy Bus has just been a really great book for us in this time.
And is that about like maintaining your energy, maintaining high energy levels? What's the premise?
I think so, man. It's about perspective. First of all, there's a lot of this book is about perspective. So the short, quick Cliff Notes summary is the character George there. It starts out with he gets the flat tire and he has to take a bus to work. And on the bus, he meets these wonderful people that help get him through this season of my tire's flat, my job's on the line, my wife's about to leave me and the kids are pissed at me, and it just stacks and stacks and stacks. And so it just journeys with him through having the right perspective and going through team building with his team. And man, it's been really good I feel it relates to a lot of like where we're at on a daily basis in this market. We're in a battle.
It is for sure. It's been hard. I mean, I've been working with my parents on trying to buy a house. It's just all cash offers. You can't get anything quick enough. You never get, by the time it hits the market, it's already got 3 offers on it, et cetera. It's been insanity. And I think it's disheartening for a lot of people that are trying to buy stuff. My parents are still in an apartment, having moved here from Virginia a little while ago to spend more time with their grandkids. It has been a tough market. Marc, good to have you here. We've been talking to Marc Marroquin, mortgage lender at Supreme Lending. My lender, Marc, with a C, by the way, Marc, M-A-R-C, mylendermarc.com. Great to have you on the podcast. Where can people learn more about you if they want to follow up with next steps?
Man, I'm going to give you, I like the, man, hit me up direct, dude. I'll give you my direct cell phone. You can call me, text me anytime. I'm at 918-851-2423. You call me, text me. Email is marroquin@supremelending.com.
Marc Marroquin, we appreciate you being here with us. Take care.
Thanks, brother. Had fun. Thank you.
Thanks for listening to the Same Day Podcast. Tune in to a new show each week and be sure to subscribe to get future episodes.